Hello dear traders and partners of AMarkets. My name is Daria, I'm the financial advisor, and today we are going to discuss the situation in the global financial markets. So let's get started. The pound remains the main market outsider both due to fundamental and economic factors. Let's start with the economy. Yesterday, the United Kingdom published its May GDP report. According to the data, the country's gross domestic product grew by only 1.8% at the end of spring instead of the expected 5%. Although the figures turned out to be weaker than anticipated, this should only be considered as the first sign. If the second wave of COVID-19 doesn't intervene, the British economy has all chances to recover and accelerate by the end of the year. Yesterday, the United Kingdom released its reports for manufacturing and other production industries, which also left much to be desired. Growth in the construction and manufacturing sectors turned out to be weak, and the service sector, which accounts for most of the economy, contracted even more in the month of May. The released data indicate that the British economy is still lagging behind compared to January figures. Today, market participants will be preparing for the publication of UK inflation stats. The reports are likely to be negative as well, which means that the pound will be facing a new round of decline. So that's it about the economic factors. Let's talk fundamentals. First of all, the pound is under renewed pressure due to the unresolved Brexit issue. The negotiations between London and Brussels are at an impasse, so fears of no deal are spreading in the market again. Rumors that the Bank of England is prepared to cut its interest rate in the coming months also weigh on the pound's growth. The technical picture suggests a correction. Yesterday, the pound fell to 1.25 mark, but managed to recover back to 1.2560. We believe that the bears may pull back to the area of 1.2560 to 1.2580, where you can start selling the pound. Targets for short sellers levels 1.25 and 1.2460. Now, a few words about the dollar. In recent weeks, this asset was overlooked amid increased risk appetite. But this week, market participants seem to have remembered it, mostly due to the deteriorating COVID-19 situation in the United States. It would be undesirable for the US economy, but they may have to reimpose partial lockdown. This strengthens the dollar, as well as growing trade tensions between the US and China. Another factor is purely technical. Gold is overbought and needs to be unloaded. But only a little bit, since the dollar is too weak to qualify for significant growth now. The Euro-USD pair is currently attempting to break through 1.14 resistance. This attempt will most probably fail because buyers have spent all their efforts and potential to get here. They need to retrace now. More drivers for growth are likely to appear after the European Central Bank meeting and the US summit, which may have a positive effect on the euro. In the meantime, we are expecting the pair to trace back down to 1.1340 to 1.1360. So, for now, this is the main trading idea for the upcoming trading session. Thank you for your attention. Subscribe to our channel, and we will do our best for you to reach success trading with AMarkets.